This is the 5-minute chart of GBP JPY. If we check the indicator table for this time frame, you'll notice it says the market is ranging. Taking a look at the chart, you can see it's definitely ranging, just like the table shows. Here's another example. The indicator shows that on the 1-hour chart of GBP JPY, the market is ranging, and looking at the chart again, it really was ranging. So if you were using this indicator to trade, not only would it help you to spot the market's trend, it would also let you know when to stay out. In this video, I'm going to break down what this indicator is all about, the best settings to use with it, and I'll even go to the extra mile to show you a super accurate pullback strategy you can use alongside it. If you find this helpful, don't forget to hit that like button. Let's get into it. First, to add this indicator to your chart, go to TradingView. Open up any asset you like and pick whatever time frame you want. For this video, I'll be using the 5-minute chart of GBP JPY. Next, click on Indicators and search for Smooth Gaussian Trend Filter. The one you want is by Algo Alpha. Big shout out to them. This right here is the powerful Smooth Gaussian Trend Filter. It's a trend following tool that blends Gaussian filtering with linear regression smoothing, which makes market trends clearer while cutting out a lot of the noise. That's the idea behind this tool. Now, to explore all the pieces of this indicator, the first thing we need to do is open up its settings. In the Input tab, go ahead and turn on these two options that are disabled by default: mid-trend signals and trailing bands. Also change the table size to large. Then click OK. The first piece of the indicator is the Gaussian band, also known as the trend ribbon. This changes color: green for bullish trend and red for a bearish one. When the market moves from bearish to bullish, or the other way around, the indicator will show up or down arrows to mark that shift. For instance, when the market switches from bearish to bullish, you'll get a green upward arrow. When it flips from bullish to bearish, you'll see a red downward arrow. You don't want to use these arrows to enter trades, but they do help show where the market trend changed. You will also spot arrows that appear within the trend itself. These are mid-trend signals. They show up when price pulls back and touches the Gaussian band during an ongoing trend. A green arrow like this signals a buying opportunity in an uptrend. On the flip side, a red arrow like this means a sell opportunity during a downtrend. These work great for trend continuation trades, especially when price touches the Gaussian band and then keeps moving in the direction of the trend. If you take a close look at the Gaussian band, you'll notice the color brightness changes. That's thanks to a feature called volume intensity highlighting. Basically, this feature changes the brightness of the trend ribbon depending on how active the market is. So if you're trading using this indicator, you won't need a separate volume indicator. The volume data is baked right into the Gaussian band. Here's how it works. The more volume, the brighter and more vivid the Gaussian band and candles become. If the market activity drops, the colors darken, showing weak participation. In a bullish trend, it's best to look for setups when the band is not only green but a bright green, signaling a high market involvement. In the same way, you may want to avoid trades when the band appears darker. This logic also applies to bearish trends. On the far right, you'll notice the multi-time frame signals table. It shows trend signals for up to 5 different time frames, marking them as bullish or bearish. You can actually change these time frames by double-clicking the table and picking your preferred ones, from the first time frame through the 5th. This table is helpful for aligning your trades across several time frames to get stronger confirmation. One key thing to remember: if the market is moving sideways, meaning it's not bullish or bearish, the table will read ranging, helping you avoid trading during choppy or unclear markets. Now you might be wondering, how does this indicator actually function? Here's a simple breakdown. First, it applies a Gaussian filter to price data. This smooths out the price line by removing noise while still keeping important market moves. Then it uses linear regression smoothing to improve trend clarity even more. To factor in market activity, it uses a normalized whole moving average to evaluate volume intensity. That's how it adjusts the brightness of the trend line based on how much trading is going on. Finally, the indicator compares the smooth trend with a super trend style level to figure out the direction and spot when the market is just ranging. This helps filter out bad trade signals. Sure, that might sound a bit technical, but the main point is, actually works and it's practical. Before we jump into trade examples, let's look at how customizable the settings are. First, you'll see the Gaussian length. It's set to 15 by default. This setting controls how much price data is used for smoothing. A higher number makes the trend line smoother but adds delay. A lower value reacts faster. I'm going to set it to 150. Next is pulse, which manages how smooth the Gaussian filter is. A higher value smooths things out more and cuts noise, but it might delay trend changes. I'm keeping this one as is. Then we have a smoothing length set to 22 by default. I'll change that to 30, which helps make the trend line even cleaner. The flattened multiplier reduces little price pumps within the trend and keeps the Gaussian bands steady. A higher number makes the curve flatter and better at ignoring short-term price noise. After that, you can turn the table on or off, change its size, and pick which time frame you want. I personally am using 5 minutes, 15 minutes, 30 minutes, 1 hour, and 4 hours. Then there's the volume intensity highlighting. I'm not using it, so I'll disable it. I'll leave the mid signals on, turn on the trailing bands, and switching off the bar colors. In the Style tab, I'm disabling bullish and bearish signals since I don't need them. Click OK when you're done. Now to enter a long position using a strategy I built around this indicator, the first thing you want is for the trend to be bullish on at least 4 of the 5 time frames. Right now, the Gaussian band is green, showing a bullish trend on the 5-minute chart. It's also bullish on the 15-minute, 30-minute, and 4-hour charts. The 1-hour chart was ranging, but that's fine since 4 time frames are still bullish. Next, you need a pullback. You wait for the price to come back down and touch the Gaussian band without closing underneath it. It can just touch with the wick, open inside it, or even close inside it, just not below it. Right there, this green candle touched the band with its wick, which gives us our pullback. Now, here's a key thing. Look for a candle pattern where there's a red candle followed by a green candle that completely engulfs it. An engulfing candle is just one that's bigger than the previous one. In this case, the green candle is bigger than the red one, so it's engulfing. That's the pattern you want. Red, then a bigger green candle. It doesn't matter which candle touches the band. The red one can, the green one can, or both. Once that's in place, you take a long entry. Put your stop loss below the most resistant swing low and set your take profit at 1.5 times your risk. Let the trade run, and it worked out well. But if you want to make sure to make way more than that and go for bigger targets, make sure to watch the entire video because I have a surprise for you just before the end of it. Here's another example for a long trade. This is the one I want to highlight, but let's quickly look at the trade before it. There, the candles came back and touched the ribbon during the pullback. Now in this current trade, both candles touched the ribbon during the pullback. I mentioned earlier, you want that red candle followed by an engulfing green one. In the earlier trade, the pattern looked one way, but this time it looks slightly different. Looking at the table, the market was bullish on at least 4 of the 5 time frames, which confirmed the setup. We entered long on the engulfing candle, set the stop loss under the swing low, set the take profit at 1.5 times the risk, and again, it worked out well. Now let's check out a short trade. All we do is reverse the conditions. We had the bearish trend on 4 of the 5 time frames, which meets our minimum requirement. Price pulled back and touched the ribbon by opening and closing inside it. Looking at these two candles, the pattern we want is a green candle followed by a red engulfing candle. That's our short entry. Put the stop loss above the most recent swing high. Set your take profit at 1.5 times the risk. Let the trade run. And once again, it worked out. To wrap it up, the smooth Gaussian trend filter is a smart and powerful tool for spotting trends and cutting through market noise. By combining Gaussian filtering, linear regression, and volume analysis, it gives traders a clear view of what's happening in the market. Go check it out on TradingView if you want to try it in your strategy. And as I promised earlier, if you're looking for a way to make this strategy a lot more profitable and go for higher targets, make sure to watch the recommended video about how to trade with my own series of Fibonacci levels on the top. And also, if you're looking for a way to automate not only this strategy, but any trading strategy into a bot with alerts, so it does the job for you while you're not around, make sure to check out the other recommended videos on the bottom. That's it for this video. Hope you found this helpful. If you did, be sure to hit that like button and maybe even subscribe to catch future videos. Thanks for watching, and I'll see you next time.